Welcome to Right Side Trading, where you can learn how to trade on the right side with confidence. Today is November 27, 2016. It is about 6 p.m. Eastern Time, and today we want to talk to you about the weekly market review. But before we do so, let me direct your attention to the bottom of our webpage, and I want to take you to our disclosure statements. In this section in particular is what I want to highlight, which states that our products and services are provided solely for educational purposes. Our written and verbal statements, including those provided on our website by our staff members, testimony, individuals, affiliates, and clients, are personal judgments and should be regarded as such. These written and verbal statements do not constitute investment advice. The government does want us to let you know we are not licensed financial advisors, so please, before you make any trading decision, make sure you consult the advice of licensed financial advisors. We are just simply people who look at charts and tell you what we see. All right, so now that that has been said, let's go to the chart of the week. And right now we are looking at the chart of the SPX right here, and we are looking at the daily chart. And we know we've done videos, we've been talking about since the bottom right here in the beginning of November how this market was going higher and higher and higher. And everything that we have said has come to pass. We saw people that were saying take your profits at this resistance level right here. We said no, do not take your profits. There were people that came and said, oh, the next resistance level will be right here. It didn't happen. We said no, do not take your profits. The next resistance level that a lot of people were blogging about out there was this level right there, take your profits. We said no, do not take your profits. Then the next level that everybody was saying you should definitely take your profits should be at the all-time highs, and we said no, do not take your profits. And so far we have been right in every single one of those situations. Okay, so the question remains, should we be taking our profits, yes or no? Let me go back and show you exactly why we say you should not take your profits just yet. And the biggest reason why we said do not take your profits is because in any uptrend market, the definition of an uptrend is a market rallies, it pulls back, then it goes higher, and then it pulls back, then it goes higher, and then it pulls back, and so on and so forth. The thing about uptrend is we have a higher high and a higher low, meaning that when the pullback took place, or this low right here, it's usually higher than the low back here, okay? And then when it goes higher, and when it pulls back again, this low right here needs to be higher than this previous low right here. So we can draw a line right here and say this was the previous low, but then now the low goes higher, and now this becomes the new low, and then when the market keeps on uptrending, this becomes the new low. Okay, and so as long as that is taking place, we are in a market that is going higher and higher and higher. Okay, until the day we see where something like this might happen, where now we break this latest high out low. All right, should we then start worrying about maybe taking some profits? Okay, until that happens, you let your profits run. A lot of people talk about letting your profits run, but they don't tell you how to let those profits run. Here is one of the many ways you can let your profits run. And what we have been doing with this market since the bottom right here, November 4th, is the fact that we just look to see if the market has made any lower lows. And the case is that we did not. This was the lowest point that we had before. Now we had this low right here was the next low that we had, which is a higher low. Then we had this low right here, which was now another higher low right there. Then we had this low right here, which is another higher low. We had this low right here, which was a higher low, okay? And then this one, even though it was so small, was still a higher low than the previous one. Then we had another one that went higher, and so on and so forth, okay? And right here was the one that came really close, but if you look at this, you will see, if you look at these numbers up here, I want you to look in particular at this C number right here when I say look at it, okay? So I'm going to go ahead and I will say look at it, and that number, I'm sorry, not the C, I'm sorry, we're looking at the L number right here, okay? So when I say look at that L number, I want you to look at that number, look at that L number, and that L number is 2194.51, okay? Now, I'm going to move it away and go to the next day, and you'll see that it's exactly the same number, 2194.51. So it came really, really close, but at the end of the day, it did not form a lower low. And so now we have the market even making a higher high and a higher low at the same time with the market registering on all-time historic high. Okay, so the question still remains, do we take our profit? See, this is the problem. that I've seen with so many people always forming targets, okay? When you form targets, what that does, it keeps you away from letting your profits run. The people that took their profits over here probably are regretting the fact now that the market is going higher. Let's not even talk about the people that might be thinking about shorting the market, okay? But let's just talk about the ones that are just taking their profits and are missing out on that. What about the people that wanted to take their profits around this level right here? They're probably regretting that too, or trying to jump back in again. A lot of work, too risky, okay? It pays to understand how to see and read the charts, okay? Some people took their profits over here, okay, and are still now regretting the fact that the market is going higher. Most people probably took their profits around here for no reason whatsoever, but just because they could not understand how to read the charts. They took their profits right there. 4 different times that people probably took their profits, started placing short bets, and actually probably started losing a lot of those profits that they made, all because they do not know how to read the chart. So it is very, very important. I keep on stressing that fact that you need to know how to read the charts because it does tell you what to look for. The other thing that I've heard a lot of people talk about is the fact that, again, we had all-time high, so of course we should be, shorting this market. But in particular, I say here's something that you need to look at, and we did a video on this. If you go to this site right here, okay, this is our YouTube page. Just go to youtube.com. You can either copy this link right here, or if you go to YouTube, type in Hindsight Trader, or you can go over here in particular and type in this, Hindsight Trader, and then type in Weekly Market Review, November 18, 2016 by Hindsight Trader, and it would take you to this video. And in this video, which was literally just done last week, we talked about how what we are seeing is the market doing something like this, whereby we are experiencing a market that is in an uprising channel, okay? So what happened is the market started from this bottom, it rallied up to this point, it pulled back, came down to this point, rallied back up there, and then now it came back down to this level, and now what we are seeing is a market that is trying to make its way back up to the top again, okay? So if I was to extend this to the right, all right, we can anticipate this market making it somewhere up to this level, depending on how long it takes for the market to get there, but eventually get into somewhere around this level, maybe the 2,300. Now, again, we are not target people. We don't place targets or anything like that. But when we look at this, we say this is a market that is showing that is in a, when you look at this channel, you put it in context of this channel, there's still more room for this market to go higher. So do not be scared or do not be shocked if even when we have a pullback, the pullback is not strong, just like we had right here where the market went up, we had pullbacks, but then it went right back up again. We had a pullback, the market went back up again. It had a pullback, and it went back up again until it got to that top right here. Because right now we've had a market that's just been going higher and higher and higher and higher and higher. We haven't really had any pullback yet. So even if we have a pullback, when everybody might start thinking, oh, here comes the bearish market, I'm saying no, do not look at this as a bearish market, more so than look at this as another pullback on its way to the top, okay? And with how strong this is, I mean, if it keeps on going up there and never pulls back, that'll be a sweet thing, because that's kind of like what we had right here where the market went up. It had a pullback around here, but then after that, it just rallied all the way till it got to that top right there. So maybe that's what it's going to try to do. Maybe not. We don't know. But the thing that we do see is the fact that this market is looking like it's trying to make its way back up to this top right here. Now, there's some indicators that we teach those who are actually students of ours that we show you when to get out exactly, because they will literally, we have indicators that will show you exactly when to get out of this market. It is one of the reasons why we said do not take any profits, do not take any profits. We said it 4 times over and over. When everybody else was taking profits, we were saying do not take these profits, because these indicators were all showing that it's not time to take these profits, okay? Now, and when and it's going to happen, the indicator is going to tell us when it's time to take profits. We will take our profits at that point in time. But until then, we don't do so, okay? So if you were part of our subscribers who are actually students of ours, you would know how to look for those type of indicators that will tell you that kind of information. But until then, we just let our profits keep on rising. But the context that I'm trying to put this in is the fact that we have an uptrending channel, and it's likely that we'll see this market make it all the way to this top right here, okay? If we go to the monthly chart, I'm just going to go straight to the monthly chart. Let me remove these lines right there. And what we have here, again, is I'm telling people, do not be afraid of this market going into a bearish mode until one thing happens. And what is that one thing that we're looking at? We want to see, let's see right here, until the market can close back below this line right here, do not expect this market to be going into a bearish mode, okay? There's a video we did in October 1st of 2016 where we compared what was happening right now to exactly what was happening in 1985, okay? In 1985, the exact same thing was happening. It bears repeating that you need to see what happened in 1985 on the monthly chart. It's so similar to what we're experiencing right now. We said it back in July, saying that August, September, October were going to be flat months, and then we should expect a pop in November, and that's exactly what we have it. So again, until this market comes and goes below this level right here, do not be crying wolf that this bear market is about to happen. Do not be crying a bubble, because I guarantee you people were crying bubbles over here, people were crying bubbles over there, people were crying bubbles since 2008. People have been crying bubbles, or 2009 should I say. Most especially since 2013, people have been crying, you know, a bubble. Just been crying wolf, crying wolf, crying wolf, crying wolf. So this is 2013 right here. Okay, people have been crying that this market should be dropping, and they've missed out on one of the best rallies that we've had in recent history. Okay, the last time we had rallies such as strong as this was in the 1990s during the dot-com era. Okay, but here we are again. You know, call it quantitative easing, call it whatever you want to call it. But the fact of the matter is, you know, you can partake in this rally in price, and when it comes down, there are things that will show you on the chart saying that this bear market is now here, and we should start expecting this market to go down. But for right now, there's nothing whatsoever. So whenever you hear anybody claiming that this market is going to bust, or we're in a bear market and it's approaching, I'm letting you know that these people have no idea what they're talking about, okay? Because at the end of the day, when it begins, and if it does begin, within a month or two, you'll be able to see that on the charts that would tell you that this market is ready to now start going down. As of right now, none of that is showing that it's ready to go down. Okay, the same analysis we can repeat on every other index. Okay, the Russell's breaking all-time highs, and it's so sad that so many people missed out on this all-time highs rally. Okay, I call it an all-time high rally rather than a Donald Trump rally. This is not, in my opinion, a Donald Trump rally, which is what most people are trying to coin it. And why do I say that? Let me go back to the SPX real quick and show you something on the SPX. Okay, let's take this line off and remove this. Now, everybody keeps on calling this a Donald Trump rally, Donald Trump rally, Donald Trump rally, okay? But here's where I believe everybody that's been saying that is so wrong, and it's so wrong to even quantify this as a Donald Trump rally. And it just simply shows me every time I hear anybody says that, it's like they really just don't understand how to read the charts, okay? Because when did Donald Trump win the election? He won the election on this day right here. Notice what the market was doing. The market already started rallying 2 days before the election results came out, okay? 2 days before that, everybody was saying, oh, the market is rallying because of Hillary Clinton. That was that Monday. That Tuesday, right before the election, oh, the market favors Hillary Clinton. That's the reason why this market is rallying, okay? And then when Donald Trump won, then it's, oh, the market literally within less than 24 hours from, oh, the market favors Hillary Clinton, that's why we're having this rally, to the next morning, the market favors Donald Trump, and that's why we have this rally. So the question is, who was it? Was it Donald Trump? Was it Hillary Clinton? Now everybody wants to coin it as the Trump rally, okay? But if it truly was a Trump rally, then it should have been rallying way before, it should not have been rallying before the results came out, because quite frankly, most people did not think Donald Trump was going to win. They thought Hillary Clinton was going to win, okay? So the question becomes, was it really a Trump rally, or was it just the market ready to move where it needed to move? And the fact of the matter is, again, you could go back to the videos that we showed, where we showed that, there were so many things that were showing on the charts, confluence of support levels so many indicators that were showing us that this was a market that was ready to go higher. And we're saying that it's ready to go higher. And we've been saying that it's going to keep on going higher. And now people want to coin it the Trump rally. It has nothing to do with Trump, has nothing to do with Hillary Clinton, because, again, they all got it wrong, all right? So the chart is just that, the chart. The market is just that, the market, okay? Now, I know a lot of people might not agree with that, but I'm telling you again, we saw this before Trump won. We saw this, prior to Trump winning, everybody was saying it was Hillary. Then as soon as Trump won, it's now Donald Trump, okay? It had nothing to do with that. So we can see this on all the charts all across the board, okay? We have the Russell, all right, which is doing the same thing again. So the question again becomes, where is this market trying to go? Okay, where is this market trying to go? If you saw what we talked about on the Russell in the video that we did last time, we showed that the Russell was already breaking out from its uptrending channel right there, okay, which is another positive sign that this market has a lot of power and a lot of juice, a lot of energy in it, showing that it's trying to go higher. So the question becomes, what do we do next week? Keep on riding it higher, okay? If you're not in the market right now, there's really no way to get into the market, only because you need some kind of like retest to be on the safe side, okay? Anything now would be you taking too much of a risk to try to jump into this market, okay? But on the other hand, if you're already in this market and you did not get out and you're one of the few people that actually enjoyed the rally and never took profits from all these so-called experts, recommendations or advice or input or whatever you might want to call it that says take your profits, then, if you were one of those that did not follow those advice and you actually stuck in because you saw what the chart was showing you, then, stay in is what we're saying. Stay in until it tells us not to stay in, okay? But the good thing is, even on this, you can see if I zoom in a little bit higher, a little bit closer from this day right here, we've had higher lows, 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 and we continue to keep on having higher lows, okay? I believe that the only thing that did not have higher lows was the Nasdaq, okay? And I think that was because of the fact that we've had a lot of volatility going on right here. Okay, so right here we did not have a higher low, but then ever since we had higher lows, and then recently we had another one where we didn't have a higher low, but then it resumed it right back with a higher high and a higher low. So again, this is a market that is just trying to show us that it's ready to go higher. We go to the Dow Transportation. We can look at the same thing too as well. All right, we had this. There was one situation right here where we had a quick peak right below it, but then it went higher, and ever since then we've been having higher lows again, all right? And the last one that we're looking at is Dow Transportation, which also has been showing very, very strong signs of higher highs, higher lows. We had that one peak right down there again, but ever since then, it's been going higher and higher and higher, okay? The whole chart for each and every one of these things look very, very similar, okay? Very similar. We could also draw another line here. Oops, let's do this again. Okay, we can connect these lines right here on the Dow Transportation. We can duplicate this line, bring it up to here, and we can see right now that it's like kind of getting to that top right there. But again, until we see some type of reversal that's actually showing us that it's ready to come down, do not do anything. Enjoy this ride, okay? It could just do exactly what the Russell is doing. Remember, what the Russell did was it broke out of that channel, okay? If we go to the Nasdaq, we have something very similar to the Nasdaq as well. Let's do the Nasdaq on this one. Okay, so we have the Nasdaq looking something like this. This is what we're looking at on the Nasdaq. If we duplicate this line, we are looking at something maybe somewhere around here that is showing us that there's still a lot of room for the Nasdaq to grow. If we look at the Dow Jones Industrial, okay, we have something very similar again as well on the Dow Jones Industrial. We have this line right here that we're looking at, which is very similar to what we have on the SPX. And what we're saying is you take that, you duplicate this line right here, and we can see that, the market still has some room to go higher, okay? Still has some room to go higher. And then lastly, we go back to the SPX. Again, of course, like I mentioned, here's what we're looking at as far as this is concerned. Okay, we're looking at this right here, and we're saying if we duplicate this line right here and we go and put this up here, this is what we see as a market trying to do, The market, in our opinion, or based on what we see right here, is showing that it's trying to go higher. Okay, and there's indicators that are supporting that as well. Again, onto the indicators as well as the chart starts telling us that no, this is not what we're looking for, or that this market is ready to come back down again. We do absolutely nothing on this chart. Let me do one more thing. I just want to kind of zoom out to like even let's go to like a 20-year daily chart so we can see, you know, how this market is shaping up, you know, in a longer picture. And, you know, at the end of the day, all we can really see is we've broken up above that high. Now we've broken above this high right here, and the market is just looking like it's ready to go even higher. Okay, so we leave it like that. We'll see how the market performs next week. This is the predominant trend pattern that we're seeing right here. This predominant trend line, right, this channel right here is what we're looking at as a predominant channel that we're looking, pattern that we're looking at to see the market follow, and we might just see it make it all the way up to this top right here. But until then, you know, for anybody to say that this market is in a bearish mode, we need to see this market close below here first, and then maybe even start going lower before we can even say that this market is in a bearish mode. Okay, and if you remember what I said from the video that I did back in October 1st, the fact of the matter is, if we look at the monthly chart, you know, I feel bad for those who are waiting for a pullback or this bearish market or this bubble to take place, because what they're looking for is something like this, steep drops in price like it happened right here, and they're looking for something like this one as well when the market rallied all the way down here. And what they're totally doing is ignoring the fact that this market has already had its version of a bearish market, which was basically from this point right here, February of 2015, all the way to like what we started experiencing the pop in July of 2016. We had about a 20-month period where the market really didn't go anywhere. And in some cases, like the Dow Jones Transportation, we did have a pullback that was a bearish pullback. In this case, we had corrections, okay? And the last, again, I'll say, you know, sometimes you have a market that is in an uptrend that looks like this, okay, where it has pullbacks, but then sometimes we don't have a pullback, and instead what we have is a flat base, and then the market goes higher. Any one of these are still all signs of a market that is trying to go higher, okay? And if you look at this, you know, we have this rally right here, we had a pullback, we had this rally right here, we had a pullback, okay? Then we had, you know, this right here, okay? And then we had this pullback right here, and then now what are we expecting? The market to go higher. So is there any surprise that we took out the highs? None whatsoever, okay? And all we can expect is for this market to go higher. For those people who might be Elliott wave theorists and all that kind of stuff, one of the things that you have to realize with Elliott waves is the fact that they always say the third rally or the third move, the third leg is usually the longest. So obviously, if this was number 1 right here, and this would be number 2, then this has to be number 3, and this would be number 4, and then this would be number 5, because that's, you know, some people out there say, oh, we're in the 5th wave, and then this is 6, and we're on the 7th one right now. I would have to say that that's incorrect, because according to Elliott wave theorists, all right, the third leg, which would be this one in this case, has to be the longest, and it's not. Obviously, we see that this right here is the longest one of them all. So the proper way to probably draw this will probably be something like this. Instead, let's redraw this and say what we have to do is we have to say leg 1 was like this, okay? If this is leg 1, this is leg 2, this is leg 3, this is leg 4, and then now we are on leg 5. Maybe then we might see something, but honestly, we just trade as we see the market, okay? But I just wanted to kind of put that out there because I know there are people who like to listen to the Elliott waves and like looking at Elliott wave signs and all that kind of stuff. But at the end of the day, the chart will show you when it's time, okay? The simple fact of the matter is we've broken out of this level right here, and until the day we close back onto below this, do not look at this as a market that is in a bubble. Do not look at this as the bear market. You just wait until that happens. Until that day happens, look, if it really is and we have another drop like we had right here, or we had another drop like we had right here, we will have plenty of time to participate in a big drop that comes all the way down, if that truly is the case. Because most people believe that we should have a drop that comes back to somewhere around this level right here. If that's the case, we will have plenty. I'm talking about months and months and months, okay? Because None of this happens in a month. It takes a few months. This took 18 months, 20 months. This took almost 3 years to take place. So you will have plenty of time, and we will let you know that when that actually happens. We'll have plenty of time to enjoy or stay away from this market and to capitalize on the next wave, whichever the direction might be. But I'll leave you at that and just say, at the end of the day, it always pays to trade on the right side with confidence.